Hi there, welcome to Kneppy Invest. We are just through one of the most boring weeks on the ASX, not the most boring week. That would be in between Christmas and New Year's, when every single company and their management are on holidays, it seems like. We don't see many interesting announcements. And just after reporting month in August, we don't see many companies releasing interesting announcements. And that was true in the past week. However, I will bring you 12 companies that did release interesting announcements. One of these companies saw their share price drop 50%, Lithium. A few companies did capital raisings and the share price dropped a lot because these companies decided they needed to do capital raising at a significant discount. AMA Group was guilty of that. And a few companies saw the share price drop because of dividends. So that's how boring this week is, because I've included two companies on this list just because the share price dropped because of dividends. One of these companies saw the share price drop 20% because of a dividend. That means the dividend yield is 20%. We'll get to that company in a second. But before we have a look at these interesting announcements and charts for these companies, let's just have a look at the overall market, starting with the XGO. And it was a negative week. It's really interesting, and this is the daily chart right here for the ASX 200 or the XJO, and there's no trend at all in the XGO. So if anyone is telling you that we're in a bull market right now, they're wrong. We are going sideways right now. This is the most sideways pattern you will ever see. Some weeks it's up, the XGO is up. Some weeks the XGO is down. In fact, last week, at this point in time, I am a week behind the core, Ausbiz the core, and some of the experts on the call were getting very excited because it was a really good week. So last week, the XGO was up. What was it up? 2.3%. 3 weeks ago, or 4 weeks ago, the XGO was down 2.6%. And this week, and I am recording this video at 4:23 p.m. So we haven't gone through the closing, or we have gone through the closing auction, but TradingView is 20 minutes behind, which means it's 4:03 p.m. according to TradingView. But the XGO is down 1.74% for the week. So there is no trend in the XGO. We are not in a bull market. So if you hear any experts saying we're in a bull market right now, even those who are saying we're at the beginning of a bull market, is complete nonsense. We have no direction in the markets right now, which is not a bad thing. And we just have to wait to see which way the market goes. More than likely, it is going to go up because that's the typical trend. The typical trend of the equity markets is up. Sometimes it goes down. We saw that during the COVID-19 financial panic. We saw that during the GFC, but usually those down periods are short-lived. Now, if anyone is saying the NASDAQ is in an uptrend or a bull market, they're probably right. But the NASDAQ is showing a little bit of weakness as we look at the daily chart for that. And the NASDAQ actually moved into an uptrend around about March and kept in that uptrend until July. But we saw, or the NASDAQ saw a high on the 19th of July. We did see a little bit of a rally, and unfortunately the high wasn't, the most recent high didn't get above that high we saw back in July. That's actually a negative thing. We want to see highs keep getting higher and higher. And the NASDAQ has pulled back the last few trading days. And what we don't want to see is the next low to be lower than the lows we saw on, what date was that? 2 weeks ago. In fact, I've got to decrease my size of my, there we go. The last lows we did see was on the 18th of August, and that low was 14,600. So if we see the NASDAQ get below that, that could be a disturbing sign for the future. But right now, the NASDAQ still is an uptrend, and this looks way more like a bull market than the XGO. So let's have a look at a real bull market. So let's go back to the XGO, and I will show you what a bull market looks like. Doesn't look like this. And I'm looking at the weekly chart right now. So let's go all the way back to the period between 2004 and 2008. And this is what a bull market looks like. This is a classic bull market. In fact, the XGO went up from 3,200 to a high of 6,800. Yes, the XGO actually doubled in about a 4 to 5 year period. That is a bull market. You could even say the period between 2009, 2010, and 2000, or even now, is a long-term bull market because we're trading in a range. But right now, it is going sideways. Even if you look at the weekly chart, the S share has been going sideways for or since May 2021. So we're talking about 2 and a bit years where the S share is just going sideways, but we're still in the trading range, upwards trading range. Now let's have a look at some commodities, and I'm becoming more invested in commodities because the way I'm going to use commodities and charts is I will become more willing to buy a company if it's trading a commodity that is in an uptrend, if they make sense. So BHP, I'm more willing to buy that company if the share price is in an uptrend, if iron ore is in an uptrend. So let's have a look if any of commodities are in uptrends right now. And there are a few. First one is gold. I'm not saying gold's an uptrend because I just want to look at gold because gold is quite popular, and gold is not an uptrend. So this is just the daily chart. In fact, you're more, the better argument would be to say that gold is more in a downtrend than an uptrend. We have seen a couple of higher or lower highs and lower lows, but I would not be overly pessimistic about gold right now, but no uptrend in gold. So it probably wouldn't be investing in any or buying any gold companies for short or medium-term trades. Unlike uranium, and uranium is definitely in an uptrend. So we have to look at the weekly chart for this. And I've noticed a lot of uranium stocks have been going bonkers recently, Boss Energy, stuff like that. And this is definitely in an uptrend. We did see the uranium prices get to a high, pretty nice high back in April, May of last year, and it is moving towards those old highs. So beautiful looking chart for uranium. Oil is another one I'm paying close attention to. So right now, I am now, said now twice. So I am more willing to buy oil companies. And so that might include Woodside, stuff like that. And the main reason behind that is this chart. So it does look like the tide has turned for oil. Oil has moved into an uptrend up to about $86 a barrel. And the lows were back in March at 65. So actually nice increase in oil, and oil is in an uptrend. This is a perfect developing uptrend. Now into lithium, the complete opposite, I suppose. I still don't understand why people are really excited about lithium, because lithium is in a classic downtrend. In fact, it's a precipitous drop in lithium prices over the past, well, since the start of the calendar year. And this is like a Matterhorn pattern. And you see the Matterhorn pattern in a lot of tech companies, particularly unprofitable tech companies. And the Matterhorn pattern is my own pattern, where the price or the commodity goes up the side of the mountain. Everything is looking great views from up there. But what happens at the top of the mountain? There's only one way to go down, and there's only one way to go, and that is down. And that's what's happening to lithium right now. It keeps dropping. So this is the weekly chart for lithium. And the last time lithium had an up week was back in June. So a couple of months where lithium prices just keep on falling. So that's really all I'm going to look at in terms of commodities. So by far, the best looking commodity is uranium, followed by oil. There might be some other good commodities out there. Iron ore actually was looking pretty good as well, which is going counter to a lot of analysis who believe that iron ore, because of problems in China, should be dropping. And I would never assume a commodity price to go up or down based off any macro conditions, because I have seen it time and time again. The experts get it wrong. They expect iron ore prices to go higher, instead it go lower, and vice versa. Just look at the chart. The chart will tell you all you need to know. Now onto interesting announcements from companies, and we're going to start with Lithium, ticker code LLL. Pretty sure this was spun out of Firefinch, FX, and something bad is happening to Firefinch, whatever it's called. What's it called? Firefinch. I'm pretty sure it's not trading. The last time Firefinch was traded, well, actually, we don't know. It's over a year ago. I was once a holder of Firefinch, then I sold out. And the last time Firefinch shares were traded were way back in June 2022. Look at that significant decrease in share price. So something bad has happened to Firefinch, and it looks like something bad has happened to Lithium, because the share price of Lithium dropped 50% on Monday. So let's have a look at the daily chart. You can see a massive drop in share price. on that day. After the share price was in a beautiful run. So the share price has pulled back all the way down to where the share price moved into the uptrend back in May at around about 50.5 cents. I did actually have a look at hot copper just to see the sentiment in shareholders. And if you go back to early Monday before the share price dropped like this, the expectations of the share price dropping were not there. In fact, there were some comments suggesting the share price will get back up to $1 after a small dip in the share price on open. So what happened to Lithium? Now, I don't follow this company close at all. And if we go to the announcement, so share price, let's go back to the trade history. Share price dropped 50.88% on Monday. Did rise on Tuesday, which was a nice little bounce, but has fallen since then. The low is 51 cents, which was on the Monday. So let's have a look at the announcements. So a couple of presentations. In fact, I'll just zoom in a little bit. Zoom in. Where's my plus symbol? There it is. So a couple of presentations the last few days. Africa Down Under presentation, conference call presentation and replay, reinstatement to quotation. So there must have been in a trading halt and then shares suspended. So they were put into a trading halt on the 18th of July. So they were in a trading halt for a long time. The trading halt was, well, should I go into trading halt? Because we don't have to know why they were put into a halt. So the trading halt was in relation to correspondence from the government of Mali relating to plans to produce direct shipped ore, or DSO. And then on Monday, they released an announcement titled Gula Mina on schedule post discussions with Mali government. So for those who don't know, Mali is a country in Africa. It's a landlocked country. I'm trying to think, sort of not quite completely Western Africa, but it's in that sort of area. You got Chad, Burkina Faso. There are quite a few companies mining in that sort of Western African area. So this announcement drove the market nuts. Now, I did read it. I went, okay, it doesn't seem that negative. So I did have a look at hot copper again, and a lot of people were saying it's not that negative. But the reason the market is selling off on lithium is just the geopolitical risk. That's all it is. We don't know how stable this Mali government is. They could do some weird things in the future. And that is why a lot of companies, a lot of mining companies in Western Africa, or just Africa itself, not even Africa, other countries in the world, why they sell at a discount to probably fair value is because of this political risk. And that is why the market sold off for some reason when it comes to Lithium. And the market cap of this company was over $1 billion. I believe it's now down to 724 million. Now, I did go through one of their presentations, and it does look like things are still moving in the right direction for the company, but just the added risk is why the share price dropped 50% for Lithium. So if you love the story here when it comes to this company, maybe now is the time to top up. But we haven't seen really any significant bounce in share price, which is a little bit, I'm a little bit wary that we haven't seen any bounce. I would have expected a little bit of bounce when it comes to Lithium, just because the share price dropped so much in one day. Now onto Somnomed, a company I've been following for almost 10 years. And I still remember about 10 years ago, maybe it was less than that, 8 years ago, there were two companies that came onto my radar with very similar markups, Somnomed and Pro Medicus. So I had a look at both companies, and there was a chance I could have bought Somnomed over Pro Medicus. In the end, I didn't buy either company. And both Somnomed and Pro Medicus have gone in completely different directions. So again, back then they had very similar market caps. Right now, the market cap of Somnomed is 63 million, which is probably lower than it was back then. And Pro Medicus market cap is something like $6 billion. So $60 million compared to $6 billion. And in fact, have a look at the chart. This is Somnomed's chart. We'll have a look at the weekly chart. Now let's have a look at the monthly chart. And the share price of Somnomed is at a 10-year low. In fact, if it falls any further, we're talking about a 14-year low. So back in 2012, the share price was at these levels. So let's go back to Pro Medicus. And let's have a look at where the share price was back in 2012. And you'll see a totally different chart. So Somnomed share price back in 2012, we're talking about 30 cents. So share price of this company has gone from 30 cents to $72.87. So back then, there was no indication that Pro Medicus was going to be the company you should have invested in. So sometimes this happens. Sometimes you get two companies and you're not sure. They look pretty good. Both look pretty good. But in the end, Pro Medicus was a winner. Now, this video is not about Pro Medicus. I've done some videos on that company. It's about Somnomed. So this company does stuff in regards to sleeping, sleep apnea, maybe. I'm not sure if they do sleep apnea, but produces and sells oral treatment of sleep-related disorder devices. It manufactures and designs premium oral appliances for the treatment of sleep-disordered breathing relieving conditions, which probably is sleep apnea. Now, the share price, as I mentioned, is at a 10-year low. If we look at the daily chart, the share price has really suffered the last few, or the last week, and is down to just above or around about 60 cents. In fact, the share price is right on 60 cents. Share price in a well-defined downtrend. So what happened with Somnomed during the week? Now, they did announce when they released their results on the 31st of August that they're also doing a capital raising. So more than likely, without even looking at it, this capital raising would have been priced at about 60 cents. That's what I'm guessing right now, without even looking at it. And let's see if we can find this pricing of this capital raising quickly. It's not going to be easy, is it? It's probably, here we go. 60 cents. All new shares entitlement offer will be issued at a price of 60 cents per new share. And it was a fairly big discount to the previous share price. So 16.9% discount to the share price on the 30th of August and a 21.1% discount to the last closing price on 30th of August. Oh, theoretical X price of 72.5 cents. So it's not surprising to see the share price down to where the price of the capital raising. I see this all the time. And it's just, I wonder why management do this. I know why they do it, because they want to give incentive for shareholders and institutions to take advantage of the capital raising. But the share price always seems to go back or drift back to the capital raising price. So I hadn't even looked at this capital raising price, and I just knew it was around 60 cents, just because the share price dropped to those levels. And the share price on the day they announced this capital raising, well, it wasn't on the day they announced the capital raising, but the day or the next day trading had begun, again, was Monday. Share price dropped 21%. Not a lot of volume either. Yeah. So that's why the share price looks, or the chart looks absolutely brutal right now. Have a look at the weekly chart. And the last time the share price was 60 cents. Let's go back. I said 2012. I think we can confirm that. We can confirm that on the fly. Yes, actually, 60 cents. There was 1 week, the week of the 10th of September 2012, and the share price had a low of 58.5 cents. Yeah, so we're talking about a 10-year low with Somnomed. Nice looking chart from 2012 all the way through to 2017 and 18. Share price went from 60 cents or so up to $3.25. But yes, share price and this company have struggled since then. And there are numerous reasons behind that, which I won't get into this video. Next, we're going to talk about Sky City, which is another gambling company, casino company. The share price of this company dropped 14.8% on Monday. And let's have a look why. And straight away, when you see the title of this announcement, you can see why the share price dropped. Application to temporarily suspend New Zealand casino license. So Sky City have casinos in New Zealand. Pretty sure they have a casino maybe in Adelaide, Darwin, those sort of areas. And the very fact that this states that there is an application to temporarily suspend New Zealand casino license probably chilled shareholders' hearts to the core, because you don't want to see any sort of license suspended when you're a casino. Now, I did have a quick look at this particular application. It was only for 10 days, and they're not sure when this might be applied. Might be in a few years' time. But again, the market doesn't like risk. The market hates risk. And if there's an increase in risk, like for Sky City Entertainment, the share price will sell off. And to be honest with you, there was actually no reason to be holding Sky City when you look at the chart. So we have a look at the daily chart first for Sky City. Share price is in a well-defined downtrend. Why would you be holding this? Share price has been a downtrend, and I should follow my own rules when I say that. I do own companies whose share price is in a downtrend, so probably I should listen to myself right now. But the share price has been a downtrend since November 2021. When the share price was above $3. Share price now is $1.85. So the share price hasn't dropped a lot, but it's still over about 40%, and the share price just keeps on dropping. This could be the end of the bad news. Who knows? A lot of volume came in on the day. Again, fund managers selling off. But again, why not just wait until the share price moves into an uptrend? That's what I'm thinking right now. I don't see how you could value this company right now. Market cap is 1.4 billion, dividend yield 6%, but casinos are having a lot of problems right now. Sky City, Star Entertainment Group, Crown is no longer on the ASX, but they're all seemingly having problems. Now to a company I once held for quite a while, and then I sold recently because the company is undergoing a takeover bid from another company, and that company is Energy One. So Energy One, ticker code EOL, and they announced this potential takeover bid on the 28th of August when they released their results, and the share price on that particular day rose 34.6%. Now, typically, when a company I own is undergoing a potential takeover, I will sell quite quickly. The main reason behind that is because a lot of takeover bids will be withdrawn, and it's much more likely that a takeover bid will be withdrawn compared to the other scenario where there's going to be competing bids. Now, that does happen on occasion, but more likely a takeover bid will be withdrawn. And if a takeover bid is withdrawn, then more than likely the share price will suffer. Now, this particular takeover bid was not withdrawn, but the share price did drop a fair bit on the 5th of September by 5.9%. So I sold at $5.60. Current share price is $5.25. Takeover bid is $5.85. Now, the reason why the share price dropped by 5% on the 5th of September is because of an announcement called EOL 4E contract timing update, which is sort of a boring sort of announcement. And this is what this particular announcement stated. The company advises that it has just received news that the significant European prospect we mentioned in the 4E has been delayed by the customer. The customer's reasons are not related to the merits of our technology, but more to do with their internal resource and capability to undertake the project at this time. The period of delay is uncertain, but we do expect that the project will not now form part of the revenue stream. So what the market is thinking now is, and let's have a look at the chart. The market is now thinking that potentially this takeover bid will be withdrawn because of this particular news. So there's more risk. So again, there's more risk. Now, it doesn't necessarily mean that a takeover bid will be withdrawn, but there is that possibility. So investors are now thinking, well, the share price, if it is withdrawn, share price might drop all the way down to $4, which is a significant drop in share price. If the takeover bid goes through, the upside is not that much, $5.85 from where the price is now. So again, it's just risk and reward, and that's why the share price has dropped. Now, I am more willing to take a position in Energy One now, even if the takeover bid is not going to go through, but I'm just going to wait. And if the takeover bid is withdrawn, I will buy some shares in this company, maybe not on the day, but soon after there. Now, the next company I want to look at is Orora. I think that's how you pronounce this company. I don't really follow this company all that closely. A packaging company. Sometimes when you buy a product, you have a look at the packaging, and sometimes you will see the Orora logo on it. I'm trying to think of a product. I can't think of a product offhand. Anyway, you can see a massive drop in the share price of this company on the 6th of September. Share price dropped 12.4%. For this company, that's a big drop. And the share price has kept on dropping. In fact, today, on the 8th of September, share price has dropped another 3%. What's going on with Orora? Let's have a look. I think this has something to do with an acquisition, maybe even capital raising. So on the 5th of September, Orora announced the acquisition of Saverglass and associated equity raising. There was also an investor presentation, completion of institutional entitlement offer. So what price do you think this was done at? Now, I'm not going to say $2.70. I reckon it's going to be lower than this. I'm thinking $2.50, just because I think it's a bigger company, and more than likely you won't see a significant sell-off down to where the equity or the 270. It is 270. I was wrong. 270. So again, just like the other company, which I was talking about, Somnomed, the share price of Orora has dropped down to the capital raising price. Again, why do management do this? Why do they give a significant discount to the capital raising price? Share price is just going to fall back to that price. And now shareholders are thinking, well, I don't want to partake in this capital raising if they can. I'm not sure they can. Maybe it's only institutions are taking advantage of this capital raising. There's institutional placement, and there is a 142.55 accelerated non-renouncement pro rata entitlement offer to investors, shareholders. And right now, shareholders are probably saying, well, I could buy Orora now at $2.69 when this equity raising price is at $2.70. So what's the motivation? What's the incentive to take part in the capital raising? Again, just my thoughts. I think sometimes management of companies give way too much of a discount to a capital raising, and I think they are being led by investment bankers who just have this way of thinking that capital raising must be at a significant discount to entice people to buy into the capital raising. But this is one reason I never participate in capital raisings unless I see the share price remaining well above the capital raising price. And that does happen on occasion. And I'll talk about another company where I could partake in the capital raising, but there is a reason why I'm not. Audinate, by the way. Now on to eRoads, a company I haven't been following closely. I should say, in regards to Orora, another thing I'd be wary here is it's an acquisition. Always be wary of acquisitions, particularly if a company is fairly large. So the larger a company is, the less likely an acquisition will be successful. Research has shown this time and time again. There's been countless examples of this on the ASX. Probably a classic example of this is Slater and Gordon back in 2015 when they bought whatever law company that was in the United Kingdom. It was a complete disaster. It destroyed shareholder wealth, did not increase it, absolutely destroyed it. So always be wary of acquisitions, unless it's a really, really small acquisition. Anyway, eRoad. I had stopped following this company simply because there was a takeover bid for eRoad. And I went, I'm not going to follow this company anymore. So this takeover bid was, it was on the 22nd of June. And the 22nd of June, share price of eRoad increased 60.3%. And if you have a look at the chart, you'll notice that the share price rose a lot, and the share price has actually trended up a little bit. So more than likely, the share price, even though share price closed at $1.12 that day, the takeover bid was probably at $1.40, something like that. So typically, you won't see the share price get to the takeover bid because there is a bit of a time delay, and you need a little bit of a discount to sell on that day because of the time value of money, that sort of thing. And a lot of times, you will see the share price drift slowly upwards, not that much. Share price has remained fairly high. And then interestingly enough, I saw the company announce a capital raising. I went, what? You're doing a capital raising when there's a takeover bid? So there was eRoad announces $50 million equity raise. So remember, the share price is $1.27. Share price has not traded since this. So last time shares were traded was the 6th of September. So they haven't opened up trading yet. And what is the price of this capital raising? So this is my expectations upon opening, when trading has begun again for this company. I will expect the share price to drop to 70, so that's 70 New Zealand cents, which is, I have no idea what's that in Australian dollars. But the share price, there should be a discount here somewhere. That's a 50% discount. 50. The share price should, well, maybe not, should decrease a fair bit. But the question I have, why is a company doing capital raising when there is a takeover bid? So there is an answer to that, which I found out, which I had no idea it was there. So if we go back to the 12th of July, there was an announcement called Important eRoad Shareholder Update Announcement, 12th of July, 2023. There's a simple reason why I missed that, because the title is, I wouldn't say misleading, but it doesn't really tell you anything. But this announcement was really important, which they did say in the announcement title. This is just saying, the management saying that they reckon this takeover bid is bogus. It's stupid. It's undervaluing the company. So what we're going to do is say shareholders should say no to this takeover bid. Don't do anything. It's ridiculous. It's undervaluing the company. And then we're going to do a capital raising at a share price 50% discount to $1.30. This has happened to a company before, Big Tin Can. So it's a takeover bid for that company at 80 cents. Then the company did a significant capital raising at a significant price lower than takeover bid, and the share price has significantly suffered. Let's have a look at Big Tin Can share price. So I would expect share price of eRoad to plunge when it reopens, because I would say shareholders are not happy. So this is Big Tin Can. Takeover bid for this company would have been, was it late last year? So it's at 80 cents. And then it must have been rejected like 9th of December when the share price dropped 21.5 cents. Or maybe that was a capital raising date. I don't know. But I know the particular news flow around this capital raising and the rejection of the takeover bid for Big Tin Can was not well received by investors. And more than likely that's going to happen with eRoad, particularly because of the discount. Can't believe a 50% discount to the share price. 50% discount. If the share price were made at $1.27, that's a massive incentive for investors or shareholders to partake in the capital raising. If they can, maybe it's institutional capital raising. I don't know. Let's have a look at this capital raising. Yeah, shareholders can partake. Yes, they can. They can acquire one new share for every 2.06 existing shares at a 50% discount. So if the share price remains fairly high, that's a real good incentive. But more than likely, share price is absolutely going to plunge. There's going to be a lot of shareholders who will be frustrated that they could have sold at $1.27 when now the share price is going to drop to, say, 80 cents or something like that. Maybe not 80 cents. Yeah, maybe 80 cents. Yeah. Australia, New Zealand. Okay, the next two companies, I saw a decrease in share price. I went, oh, what's happening here? And then I realized the reason why the share price dropped is because the shares went ex-dividend. These two companies are Air New Zealand. So share price on the 7th of September dropped 7.2%, which tells us the dividend yield of this company is around about 7%. And you can notice just before the company went ex-dividend, there was a nice little rally in the share price. I have seen this happen for a few companies. So this is just income investors see a nice dividend yield, see an approaching dividend, company going ex-dividend, they take a position in the company to get that income. That's why sometimes you will see the share price rally just before a company goes ex-dividend, and the share price fell to the share price it was before it went on this little rally. So share price again dropped 7.2%, or it dropped 5.5 cents. So let's have a look at what the dividend yield was for Air New Zealand. Now, if you don't know when a share price is going ex-dividend, or there is lots of websites out there, but all you have to do is go to CommSec, have a look at the dividends section on the company web page or the site, and you can see historical. They have a most recent, which is 5.6 cents. Remember, the share price fell 5.5 cents. Dividend yield 2.8%. That's wrong. It's 7% or something. Actually, that's the dividend yield for the whole year. So dividend yield, that's wrong. It's definitely wrong. And next dividend date, 7th of September. Yeah. Dividend much lower than previously. Jeez. Anyway, so share price should drop around the same amount as the dividend when a company goes ex-dividend. And the same thing happened with Base Resources. So again, I was wondering why has the share price dropped 20%? Fell 4.5 cents for Base Resources. And we saw another not beautiful rally in the share price of Base Resources. Not sure why. And then all of a sudden, share price dropped 20%. Is the dividend yield for this company really 20%? So let's have a look at Base Resources. So again, the dividend should be about 4 cents. Yeah, 4 cents. Share price dropped 4.5 cents. Dividend yield says 42%. So they must have two dividends. So there is something unusual happening for this company. More than likely, their operations will decrease significantly and they won't be bringing in a lot of cash, because if they maintain this sort of dividend over the next few years, you could just buy Base Resources shares right now and get your capital back in just dividends. So more than likely, we'll have to have a closer look at Base Resources. Why is the dividend yield so high? So again, more than likely, they're in production, and for some reason, production is going to finish. Maybe they have to go to a new site, a new mining site, and for some reason, the company just wants to give all this cash flow to their shareholders and not keep money to buy a new project or something. I have no idea. Now on to WestStar or WestStar Industrial. This was interesting. I went through some charts yesterday and I saw WestStar Industrial share price drop 33% on the 1st of September. And I was like, oh, what's happened with WestStar? So this company is profitable. It's very unloved, has a really low market cap, $15 million market cap. And more than likely, because the share price dropped 33% on the 1st of September, it was in regards to full year results. So let's have a look at the announcements. So the 31st of August at 6:09 p.m. So this was after trading had closed for the day. Preliminary final report. And I do remember having a look at this, and I was, I didn't take a lot out of it, apart from the fact that profit fell 59% to 1.8 million, even though revenue rose 67% to 304 million. So you can just see minuscule margins for this company. Revenue, 304 million, profit 1.8 million. Now, I haven't gone through this, the reasoning behind why there was a significant decrease in margins for this company. They should explain why somewhere. And I am just speed reading this. Faced numerous challenging conditions across key markets during the year. Some of these factors included delay of the award of a number of key projects, and as previously stated, significant cost inflation impacts for long-term projects and availability of skilled labor across the board for construction projects. There might be some other reasons here why margins have dropped, and it's going to have a look, very quick look. There could be, there's a lot of commentary here. I'm going to have a quick look at the cash flow statement. So facts, negative cash flow in operations, 5.2 million. Company did burn through a little bit of cash, only $4 million of cash. They have $16 million of cash on hand at the end of the financial year. Do they have any debt? Borrowings, no significant debt. They do have a bit of trade payables. So this company could be trading below cash value. Maybe not cash value. Yeah, cash value. If current cash is 16 million, this company is trading under cash value right now, which is interesting. So market cap of the company is about, well, according to ComSec, it's 23.3 million. So have to have a closer look at this company. But the reason why the share price dropped 33% is because of a significant drop in profit and problems with the overall company. Potentially, the market has overreacted, just potentially. But one of the reasons why I would be very hesitant buying these sort of companies is because these low margin companies is because if one thing goes wrong, it can destroy the company's profit. I've seen this time and time again. When a company that has really high amount of revenue, one bad thing happens and it destroys their revenue. Not revenue, destroys their profit. Maybe that's what's happened with WestStar Industrial. Now, in saying the share price decrease in WestStar was fairly big at 33%, not quite as big as Lithium, and nowhere near as big as AMA Group. Share price of this company dropped 50% today on the 8th of September. So why did the share price drop 50%? Let's have a glance. Now, the funny thing is, before this drop in share price, if you're having a look at the hourly chart, I was a little bit interested in this company because the share price had moved into an uptrend, but was really struggling in getting above this little resistance level at 14.5 cents. You can see it tried on 3 different occasions to get above that level and then failed. And just before the share price plunged 50%, share price was moving down, was struggling. So let's have a look at what happened and what caused AMA Group to plunge 50% in one day. So either it was a profit downgrade, and a pretty big profit downgrade, or it was a capital raising. But typically, capital raising isn't done at a 50% discount. Well, I shouldn't say that, because there's one company, eRoad, who did the discount or the capital raising at a 50% discount. Yes, for some reason, management will do that to entice, encourage shareholders to participate in the capital raising. But when you see the share price drop 50%, you're probably less inclined to take a part of the capital raising. So was this a capital raising? Can't believe the share price dropped exactly 50% from 12 cents to 6 cents. Okay, so they went into a trading halt. Did they go into a trading halt? 7th of September, financial year 23 results presentation and equity capital raising. AMA Group to raise 55 million to strengthen the balance sheet. So there is a positive behind this capital raising to strengthen the balance sheet. Probably the company has a fair bit of debt, I would say. So let's just surmise what the price of the capital raising is. So I'm thinking straight away it's 6 cents. Now, if the capital raising price is above 6 cents, that is a big problem for AMA Group. It just means that shareholders and funds are very wary of this company. So let's have a look. Raising a fair bit of money. Where's the price? I can't see any price. 7.5 cents. This is concerning that the equity raising is at a price of 7.5 cents, which is still a big discount, 37.5% discount to the last traded price. The very fact the share price has significantly fallen below that equity raising price is concerning. In fact, it's not fallen below, it's fallen significantly below it, 1.5 cents below it from 7.5 to 6 cents, which tells me the market is not convinced about AMA Group. And to be fair with you, this is a really low quality company. When I say low quality company, so the market cap 129 million, but if you look at the revenue, this company has almost, in 2021, had almost $1 billion of revenue, but they really struggle to have a profit. That is a sign of a really low quality company, a sign that a company has no competitive advantage, has no moat. And you really want a tiny bit of a moat for a company to succeed in the long run. And AMA Group is just not that sort of company. So really interesting reaction from the market in regards to this capital raising. The market's just not convinced. Now onto Platinum Management. We're looking at the daily chart for this. Now the chart looks ugly. It's starting to look ugly. The share price was remaining above this nice little support level at $1.58. You can see it hit 1, 2, 3, and they just moved along it for a long period of time, and then finally broke through it on strength on the 24th of August. More than likely, that's the full year results. Share price on that day dropped 4.6% on large volume, and then see the share price just plunge. So this is the opposite of a breakthrough, what you want to see if you're going long. This is a complete opposite. So if you reverse this chart and you saw the share price moving above a resistance level on strength like this, that would be a buy. This is a sell. And the share price has plunged or continued to fall since then. I think the reason why I wanted to include Platinum Management is because they released funds under management announcement today, and that's why the share price has fallen another 4.4%. So more than likely another decrease in funds under management, and it might have surprised the market based off the share price drop. Funds under management went from 17.8 billion to 16.7 billion. They experienced net outflows of approximately $912 million. This figure includes a previously announced institutional client redemption of $650 million and net outflows from the Platinum Trust funds of approximately $205 million. So what I want to see with this company or this fund manager and Magellan is rising funds under management. At this point in time, Platinum Asset Management has dropping or falling. I have heard some experts say this is a buy because of the value, but why would you buy this when the share price is in a downtrend? Again, we don't know how much has to fall. You can see the share price was in possible developing uptrend back in the start of 2023, but that failed when they released the half-year results on the 23rd of February. Share price on that day dropped 17%. That was an automatic sell as well. Now onto the last company I want to feature in today's video, and that is Audinate, a company I do own. In fact, the only company I do own. Audinate, a beautiful chart, released really good results. The market absolutely loved it. And then the reason why the share price dropped what was it, 9% today on the 8th of September, 9.66% on the 9th, or whatever it is, today's date, 8th of September, was because of a capital raising. And again, let's surmise what the capital raising, well, I already know, is at $13. And the share price has fallen below $13. So I was asked, am I going to participate in this capital raising? No, share price is below $13. If I want to add to my position, I'll just buy on market right now. And to be fair with you, I'm not going to buy on market right now. Now, I do applaud management for doing this capital raising. It's, was it $50 million placement in an SPP? I think it's overall about 70 million, if I remember correctly. Yeah, 70 million altogether. And cash after this capital raising is going to be 90 million. And I actually applaud this announcement, this capital raising by management, because they are doing capital raising when the share price has rallied a significant amount. That's exactly when you want to do a capital raising, when the share price or the company might be overvalued. You don't want to do it when the company might be undervalued, when the share price has dropped 50%. That is the worst time to do a capital raising because you're not creating value for shareholders. So yeah, this is a pretty good capital raising, but again, it was a discount, a pretty big discount to the share price, and it's not a surprise. So they've mentioned here the price is a 2% discount to the VWAP of shares trading the ASX over the last 5 trading days, but share price has just been going bonkers. So yeah, but share price is still an uptrend. It is a little bit concerning the share price has fallen below the capital raising price, but that's okay. This is a good move by management, in my opinion. In fact, this could lead to, this $70 million of capital raising could lead to profits increasing by a greater amount than what they could have if they didn't do this capital raising, if that makes sense. So this could actually create value in the future for shareholders. It all depends on what management do with the funds. That's the most important part. And that is the most important job of management, capital allocation. What am I going to do with this money? Either through the cash flow in operations or free cash flow in operations or capital raising money. What am I going to do? What are we going to do with this money? And if they are smart, they can create value for the shareholders if they use this $70 million wisely. And I have enough faith in management that they will do that. So that's all I have for this video. I made a slight mistake in Energy One, so I actually had to redo that bit. That's why there might be a little bit of a glitch just before you watch the Energy One. But overall, fairly boring week on the ASX. And in fact, I've included a few companies that had or went ex-dividend, that include quite a few companies that had an equity raising. Just shows you there were not a lot of really positive announcements or negative announcements during the week. And I'm going to have a great weekend. I'm going for a long run tomorrow. I hope you have a great weekend. If you're watching this on Saturday or Sunday, hope your weekend is going great. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can meet your or speak to your own financial needs. That's it for this video. Have a good day. Bye.